Hi guys, welcome to Modern Wall Street's Trader Talk. And with all the things that are going on this week, I think it's fair to play a little multiple choice with Peter Tuchman from QMS. Peter, are you ready?
I'm ready. Questions?
All right. So,
All of the above. Go ahead.
so first question, yesterday's sell-off, rising yields or Walmart?
Walmart, 100%. Funny thing about Walmart is even it's heavily weighted in the Dow and the S&P. What's more powerful about it is, so there are different outlooks. Boeing, we had some updates recently, a couple months ago. The thing about Walmart is it's funny, over just watching it over time, not only can Walmart sway the market per se, but it can change the whole sentiment of the marketplace. So not only is Walmart going up and down big, and it's affecting the markets in a big way. So you're going to see the Dow down 200 points, the S&P getting slammered. But there's, for some reason, Walmart is sort of the bellwether of the U.S. economy in certain ways, right? And it was sort of curious. I mean, there are reasons their earnings were poor, but at the end of the day, where Walmart goes, the market goes, and that's significant. Yes, some of their numbers were poor. There is a reasonable explanation of what happened. We can talk about that in a minute, but it's the biggest thing in the world. Walmart's huge.
Okay, well, I wanted to talk about sticking with the economy because we're going to hear from the Fed later today with their Fed minutes. They're going to talk about their ideas on the tax overhaul and inflationary pressure. So which is more important?
So I think traditionally raising interest rates usually puts a negative on the market. It has in the past. But as we've talked about, I think we're in new rule mode. And I think that when they do it in a strong, solid market that's up on good economic growth, and that in accordance with the tax reform and the infrastructure and government spending and whatnot, if you're selling in the strength, it's actually not a bad thing. And so the interest in the market, taking advantage of that, I think it doesn't, it may put a pause in the marketplace a little bit, as it did last week. That was a catalyst. There was a lot of emotional selling, but at the end of the day, as we also said last week, the fundamentals haven't changed, right? So what are we going to look at? I don't think, we have not seen what the Fed does affect the market in a big way for a while. In the old days, it used to have a huge effect on the market. When those days minutes came out, or they raised it up, a quarter, whatnot, market would have huge fluctuations, as they do. But they used to follow through more. Now they don't as much.
Okay, so the tax over. Oh yeah, look at him. Look at him go. Look at him go. He is up. Well, okay, so then we could say the tax overhaul has helped some fundamentals in the market.
Because Walmart talked about it.
Yes.
Walmart made this big bet on Jet.com, trying to get into the Amazon field, then getting into the food delivery service and all that. And net at the end of the day, it did not affect their online sales and guidance in a good way. It's curious. That'll probably shake itself out and be eventually okay, although it's really hard to go up against Amazon. But I think we're going to see, even though net this tax reform thing is a huge deal as far as repatriation of funds and whatnot to the U.S., I think each company is going to have their own reaction to it. And I don't know if we know that yet.
Yeah, I did a story on Walmart yesterday saying that they didn't deliver literally with their e-commerce. So anyway, Peter, thanks for wrapping up the Wednesday with me.
Just let's note, we're back at 25,000. Market's up 150, right? Still good in government spending, economic growth. Q8 2018 estimates, all 4 quarters, double-digit growth. Everything's fine. Relax.
Yeah.
Have a smoke and a pancake.
Oh, Peter.
That's all I have to say to you.
Peter, you're the best. Enjoy your workout. We'll see you next week.
Bye. Thanks.